right. Good evening, everyone, and welcome. This is Angel. Welcome to Beyond Charts Weekly Ahead. The week ahead. So basically, what an amazing week! Look what's going down with my hair. Anyway, uh, how are you guys? Hope you guys are having a wonderful, wonderful weekend. So, all right. So we had a wonderful class. Today was our first class, a momentum trading class. It was great. It was great. Off to a good start. It was 2 hours. A lot of great questions. A lot of great setups. But let's dive into what's going down this week. All right. Let's go get it. So right off the bat, let's start off with what news or major news events is coming up to the horizon. So right off the bat, what I'm noticing is let's go on to right here. This is my on my Twitter page. If you want to have access to that, just go on the link and you can have access to that, or you can find it yourself. But the biggest news this week, more than anything, all traders, all hands on deck, all eyes is going to be take care of this day. It's going to be Wednesday, January 26th at 2 p.m. It's going to be an extremely, extremely volatile market. Yes, more volatile than we just experienced, because this is where Chairman Powell is going to determine the future of the interest rates for the United States. Now, there's a lot of great talks this past weekend. The banks announced earnings, and we haven't heard a lot of great responses from them on where they expect rates should be. We've been hearing whispers of 3 to 4%. We're hearing Jamie Dimon talk about, hey, that there's no prosperity for the next 6 to 8 months. We have Citibank that came out. Bank of America was the only one that had a little bit positive review, but other than that, it wasn't really that great. But again, all eyes are going to be on Wednesday. Where is it going to go? Nobody knows. Nobody knows if he's going to raise interest rates or not, guys. Nobody knows, okay? Here's the thing that I found out, and pay close attention. Most people who have an opinion, all right, and they're going to tell you, I don't think it's going to raise interest, it's more than likely because they're probably in some long-term stocks that will be affected by it, and they're trying to validate to themselves why they should stay in. The truth of the answer is nobody knows. However, if you want to learn how to take advantage of that, stay tight, because we're going to get to that level, because, again, we've called this out pretty beautifully in the weeks ahead. We've been calling out the plays all throughout the week on a day-by-day basis if you're a momentum trader. And the reality is I'm watching a lot of people on the social media aspects who never experienced a bear market. The last bear market that we had was in 2008, and it's pretty severe and fast. A lot of these traders who are brand new have never experienced it, and nobody really knows what they're talking about. You know what really doesn't lie? It's price action. But if you want to know about that, let's get to it. Now, the other thing we also have to worry about is, and as I go into it, so we got that. We also have GDP numbers coming out on 8:30 on Thursday. So it's going to be a very, very loaded macroeconomic week. We also have PCE, which is price consumer expenses, right? So, yeah, personal consumer expenses. So that's going to be another one. All right, but let's go in. So those are going to be the big, big meetings that we have to take care of. And here's a much bigger look of the things we have to look for. A lot of macroeconomics this week. Okay, so it's either going to up and down. I have a few plays here ready for you. Now, as far as the earning announcements, this is what we have to worry about. So it's pretty heavy, but I think the FOMC meetings, it's going to really, it's just going to take the main stage this week. Now, this week, who do we have? Well, we want to listen to what everybody is saying right now. And across the board, we're noticing that the common theme this quarter is going to be what? Costs are really, really gone through the roof. At least that's what the banks have told us. But main thing we want to see if they're echoing the same thing. Let me see. We got Microsoft on Tuesday. Microsoft got hit pretty hard. Logitech. Who else? Raytheon Technologies. Levi's, that's retail. Retail got hit pretty hard. McDonald's, Nucor, Gold, MasterCard, Robinhood, Apple on Thursday. Southwest Airlines, what else? Progressive Insurance, Caterpillar, Chevron. So we had a pretty full week again, and I think we're going to listen to what Apple has to say, because they can really tell us what's going to happen as far as like with the rest of the tech sector, give us some inside scoop. Tesla on Thursday, that's a big one, and Intel. Netflix came out and they basically, they got hit pretty hard. We saw that coming because we saw it in the price action as well. But, let's not talk about the past. Let's talk about what to expect and how to get into and what to expect for this week. So let's go into it. Again, and that's what you should expect for this week. So now, as far as what we do, we're always going to be looking at the same old thing. The main thing what we do a top-down analysis, and we're going to be looking at what the market environment, right? So right now, it's really about market environment. What are you looking at right now? Well, you're looking at the XPX, the NDX, and the Russell 2000. This is the ultimate show. Last week, I told you 4 days ago on the XPX, I told you 1, 2, 3, 4, that the XPX does not like to stay near the 50-day moving average, and there's probably something big is about to happen. Guess what? Something big did happen. Okay, now I'm going to give you heads up. Right now, a lot of you, I hope not a lot of you, if you've been watching me, you probably got a little warning and you're probably doing well. However, some of you, maybe you're watching the show later, maybe watching now, you're going to be hurting right now and you're probably going to be inclined to sell right now. And we expect you to sell. I'm going to tell you that more than likely we're at the 200-day moving average, and more than likely there will be a relief rally tomorrow. Okay, that's how these things work. Now, the question is it going to go, which I don't know, nobody knows, but is it going to go up and meet the 50-day, right? And then that's going to set up with the MACDs coming up. Are we going to have one of those rallies? Don't know. And then they sell into it? Or is it going to teeter-totty until Wednesday? And then maybe whatever Jerome Powell says, we don't know. He could surprise us. If he says he's going to raise it 50 basis points and they're going to pull the taper and he's just going to say, screw it, we're getting into this thing, then we're going to probably sell off pretty hard, right? More than likely. Who knows? Nobody really knows. I'm just guessing, right? Or does he delay the tapering? He doesn't do a rug pull. He delays the interest rate. If he does that, we could rally. How do we know if we rally? Well, simple. We're going to be looking at, again, I told you that more than likely what I expect, and I'm kind of telling you this right now, I expect this. I expect us to rally tomorrow, right? Rally, meet the 200-day, maybe Monday, Tuesday, Wednesday, we stall, and that'd be amazing. And then something big is going to happen, either up or down. A lot of people are thinking down, and that's going to be a dead cat bounce. Now, what do I mean by that? If you're looking at it from this point of view, and here, guys, look, I'm just going to point out the obvious. The obvious is this. If we start looking at it from the monthly perspective, we're pretty far up. We haven't touched the 50-day, 50-month average for a long, long time. We can go down on a monthly basis to about 3,300 and still remain bullish on a monthly level. I know a lot of you don't want that, but that is the case. That's a possibility. MACD is about to turn, and is coming to weakness right here. If we go look at weekly, here's something you want to consider. By the way, I mentioned this to my group that we were coaching earlier today. And I said this, look at this. This is 2000, last year, 220. This is when the 40% of the most money that enter into the economy since dollars ever printed. That was last year. This is the first time for a long time that this is the weekly. The weekly, the XPX has followed the weekly 50-week moving average to a T. You can go back and test this yourself. I already have. And then look what happened. It was following. And ever since COVID, we shot up and never touched the 50-week moving average since the last time we touched it was June 29, 2020. Where do you think we're going to go? These things are magnets. More than likely, we're probably going to go to that 50-day, which is 43.54. That's a pretty strong level. Now, the question is, are we going to hit it tomorrow and then rally up? Or are we going to rally up and then maybe hit it on Wednesday, Thursday? Now, if we take 43.54, we got to watch out below. Okay. Also, if we start looking at the dailies, which is what I look at, we're right at that 200-day moving average. 43.54 puts you right in here. Just to give you a visual, 43.54 is right there, which coincides with this consolidation, and we're not too far from that. Now, the MACDs on the dailies tells me that we can probably go a little higher, and they're too spread out. I would like it to squeeze in a little bit, and let's see what happens there. But it looks like we can still go lower. Now, tomorrow is going to be a big day. What's going to determine that? I don't know. If the market sells off tomorrow and then rallies, which I'm thinking that's what's going to happen because it's probably going to be maybe a dead cat bounce, and this is something you got to be worried about. We're going to form a lower low. Now we're going to form a higher low. What happens here or on the way up there then that is going to be the second drop. And that drop will be huge. I hope that doesn't come, and I hope I'm wrong. But just to give an example of this, let's go into Bitcoin. Do you remember Bitcoin? Doesn't that look familiar? We had the drop, came back up, and then guess what happened then? It dropped. These patterns happen over and over again for a reason. They've been happening for a very, very long time. And I hope I'm wrong, but if you're protected, there's ways that you can do that. So again, are we going to rally tomorrow, head back lower? But this week, the levels that we're going to be looking at, I'm going to be looking at 43.70 for the high side. And we're going to be looking at that 43.54, right? Now, we had a huge drop, and I expect there's probably going to be a lot of short covering tomorrow, and it's going to rally up. How high up? I don't know yet. I expect it to rally. So that'll be Monday. That'll be Tuesday. What's going to happen Wednesday at 2 p.m.? That's the question. As far as the other indices, now remember, the Fed has told us they haven't even unloaded their balance sheet yet. Guess what that is? That's the XPX. So who's unloading? A lot of the funds and institutions are getting ahead of themselves. That's who's unloading. I know retail's not unloading. Retail's hurting right now. All right. NDX broke the 50. And the things you want to watch is you want to watch the 50. Broke the 50. Needs to rally. Again, how far did we go up? And again, 14,394. We need to rally. And by the way, this is the dead cat bounce that happened last week. Broke down, hit the 50, and sold off. Happened on the Russell. Hit the 50 and sold off. Hasn't happened on the XPX yet. Okay, so watch that. Russell, much weaker. I told you, had a cliff. Russell can go to 1750. NDX just broke the 200-day moving average. Is dragging the whole thing market down. NDX next stop, 1400, 14,000. Next stop. Those are the next stops. Now, I'm not saying sell everything. I think that there's going to be, they're just resetting everything, guys. The cost of money is getting more expensive. So they're reevaluating everything. It doesn't mean that the company's not doing well. They're just reevaluating. They're resetting everything, right? Everything's being reset. That's what happens. Happened in 2008. It'll keep happening over and over again. All right. So let's dive in. Where's the opportunity today? So if you're trading with me or you're watching XPX, you're going to see that, okay, here it is. You guys know that. Oh, let's look at the VIX first. Where's the VIX? So the VIX is a measurement of fear. If you watch the VIX, it's a good tool to have. You'll notice that fear, and this is the box is the weekly basis. This is the daily basis. So basically what happened? There's been fear that's been entering into the marketplace. People are buying puts. Key levels to watch. It looks like we should blow it off. So in retrospect, if we come down Monday, Tuesday, and linger in this area, we can probably maybe pop. Maybe. How do we know if we go lower? Well, if we break down 29.93, then we're probably going to go lower. My alert's already set. If by chance Powell doesn't do anything and we rally, then you're going to see us break 23.38 and 21.20. That means we go higher. Pretty simple. This is how you use it. On the treasury notes have come down. This is a 10-year note, TNX. If this can happen, by the grace of God, come down below 1.70, that could be possibly good for tech. Maybe. But if we remain higher, you have to get tech adjusted to this rate being here. But if we go lower, it's a possibility. That could be maybe a positive note for tech. We won't know, but watch it there. We have the tech. Now, where are my treasury notes? So let's find out where the treasury note. The futures are at 44.25. So they're, like I said, they are rallying. Now let's see where that puts us. 44.25 will put us right now. If we were to open 44.25, that's going to put us at 44.35. So it looks like we're having a little rally. The question is, can we hold this? Now, if we're looking for a level on top, we're going to be looking at 44.95. That's one level for the week. The 50 can meet us right there, and let's see what happens. The other level we'll be looking at is right in here. Is that 4,600? That's the level for the week. Now, if we take out 43.97, then I gave you 43.50. That's where, that puts us right at that 43.50. And then we have 42.82, and that's going to be the next level down. So again, what do I suspect? Higher, maybe drop. I don't know what Powell's going to say, but this MACD right now is setting up. I would like it to set up right here. If you want to know what I'm going to be trading, log on. We go on 8:30 in the morning till 9, and now I'm going to share my setup of what I'm going to do every morning. I'll be happy to share that with you. On the 15-minute time frame, it looks like we need to rally up. So we're 43.25, puts us at 44.35. Right in here, we're probably going to rally, and we're going to see what happens there at that 44.95. So again, those are the levels that I'm going to watch. Now, the levels for last week that you're going to be watching is right here, 46.17 and 43.96. That's the range that we were in last week. This is where the sellers were, and that's where the buyers were. Pretty simple. All right. Let's dive in. Let's see if we can find any opportunities here. So I'm not going to show you that one. I'm going to show you, this is the week ahead. So let's go into the FANGs. Oh, let's go into the FANGs. Yeah, let's see the FANGs. Okay, the FANGs got hit pretty hard. Let's see the FANGs. Okay, let's go to Facebook. Again, what are you looking at? You're looking at the dailies on the right side, and you're looking at the hourlies on the left side. So Facebook, again, got hit pretty hard. They're taking it down before earnings, which is February 2nd. Okay, right now, there's a lot of supply at that 353. Watch it at 331. And it could, if it rallies, it got 298 to the low side. So those are ranges for Facebook. If it takes any of those things out, if it goes lower, it can probably head lower back down to 269. So you have some plays there, but let it rally first. Facebook, too far away from the 50. Ideally, we'll like it to come back to the 50-day moving average around 314, 310, and see what happens there. Apple, taking it down. We told you last week. It's breaking the 50-day moving average. The MACD told you it was breaking. It's still going. Has earnings this Thursday. Watch Apple. See what they say. Nobody knows what Apple is. It's a crapshoot, but let's see if Apple rallies to that 168 and see what happens there. But if Apple continues to decline, it's probably going to go to 157. Okay. 157, and then watch it at 168. If it can take that out, it's probably going to go to 177. Amazon, taking it down. Earnings coming up, they're taking this one down. Amazon could rally and see what happens with the rally. Let it come back up and see what happens. Okay, too far away from the 50. If you want to trade it, let it come back up to about that 3,000 maybe, 3,000. See what happens there. Amazon got hit pretty hard. Let's see what happens. And again, see what happens there. Don't know if it's going to go up. Netflix. Okay, so Netflix needs to rally. Got hammered pretty hard. They have to absorb the shorts. What do I mean by that? It has to come back up. MACDs are telling me it's coming back up. Let's see what happens around that 430. Let the 50-day moving average come back and see how it reacts there. It might retest the lows before it heads up, so that might be a trade there. Don't worry. Tune in tomorrow. I'll let you know exactly what I'm doing. Google broke the 200-day moving average. They took this one down. Boom. Needs to rally a little bit, right? Needs to rally. Let's see what happens at that 2680 as it comes down right in there on that 50. Microsoft earnings this week. It's probably going to touch the 200-day moving average. It's probably going to base 192. What's the moves here? Well, to get better, watch it at that 304. Microsoft, okay? As far as, let's see, at the stocks that I'm looking for, everything's pretty much going down, but let's look at the high volatile stocks that I always cover. Russell's working what is trying to rally, right? Okay. Google, let's see. Tesla has earnings. Tesla, ironically, still selling off. It's holding pretty better than the other ones, but it's in a range, more sideways range right here. So watch it right there. Let's see how it reacts at that 1050 to somewhere in there. Is it going to rally? It looks like there might be a divergence here that if it can follow through, that they might kind of linger in this area. So they might have some moves here. Tesla probably needs to rally up. It's probably going to go up to that 1,990. See how it reacts there. ISRG came out with earnings and it got gapped down. Okay, so they're taking this one down. I didn't get into the earnings report, but this will probably rally, filling in that gap at 291, which is going up to the 50-day moving average. CMG raising prices, not helping them. Okay, so CMG taking it down. They're taking everything that made money down. Watch CMG, watching how it reacts around 1468, could work its way lower. I gave you, so here's the thing on Bitcoin. Now let's talk about it. Bitcoin obviously has a reaction to the Fed. Bitcoin is going lower. But the one thing I have noticed on Bitcoin, for you guys that are long-term investors, Bitcoin right now, MACDs are crossing. That's not good. It's more likely going to come down to that 29,000, right? We got to watch it because it come back to the 50. But I see Bitcoin in a range, right? Now, I'm not telling you because I own Bitcoin. I actually don't. I was trying to get into Bitcoin. But Bitcoin has a lot of buyers at that 29. If that gets taken out, then watch out below. It's probably going to go down to that 19. A lot of demand at 68. Now, this is Bitcoin and the last is January 4th, 2021. We've been going sideways on a weekly basis. So are we going to continue sideways? Probably. My guess, if the buyers come in at 29,000, we're probably going to head and stay in the range from 29,000 to 64, 65,000 and then break higher. Don't know if that's going to happen. I don't think we're going to hit 100,000 anytime soon. Not this year anyway. Maybe I'm wrong. I don't know. Bitcoin trying to work his way higher. Let's see what happens there. Now, if you feel Bitcoin is going to drop, so is MicroStrategy or any company that has Bitcoin on their books. Now, MicroStrategy got hit pretty hard. I'm going to look at the dailies. MicroStrategy is working his way lower, can go back down to $157 if Bitcoin goes up. It's probably going to rally a little bit and then work his way lower. Okay. Let's go to the other stocks I'm looking at. LRCX, they're taking everything down. Goldman Sachs, taking everything down. So I'm going to look for a play if there's anything at the 50 for my stock traders to play short or long. Roku, working his way down on the daily. Roku's getting hammered. Guys, things can be reevaluated back to where they were pre-2021. $53. I mean, they can work his way lower. Nvidia working his way lower. Melly working his way lower. Apple. So what I'm going to tell you this week is the theme of this week is basically that things probably need to rally up. How high up are they going to go? I don't know. But I wouldn't buy the dip at this moment. And what I mean by that is this. Let's use Shopify, for example. No, I don't want to do that. Let's use Shopify, for example. Okay, so let's say Shopify is here. Shopify just got hammered pretty well. Is it time to buy the dip? Well, we have earnings coming up. Let's see how that responds. So let's look. Why I wouldn't want to buy the dip? It's because the pattern that we're going to be looking for is we need a basing pattern. And what I mean by that, I need Shopify to rally and I need it to come back down. And then I need it to come back down and rally and show me that's going to consolidate. This is called a basing pattern. It doesn't matter how long it stays here, how many times. But once it bases, it's going to tell me that this is a level of supply, that they're selling it there. This is a level of demand. That's called a basing pattern. And then what you do, you draw a line at the top, and when it breaks through, you can get in there if you want, or you can come back when it retests, right? It had a basing pattern, broke, retested. Now you know that they're starting to accumulate the stock. This is how you trade or buy the dip, because you by yourself as a retailer are not going to move anything. We need the institutions, the big money, to come in and set this up in place where you're just going to watch, and when it breaks, comes back, then you get in, right? Instead of you doing collar DOS averaging. So guys, what I'm noticing across the board, and I'm not really noticing anything. I'm noticing it's probably going to rally. And then what happens on Wednesday, I think it's at the mercy of the overall markets. That's pretty simple. I think we have to listen to earnings plays. And I think that I think that's going to be key. But not really excited for anything long term. As far as Bitcoin, Bitcoin is going lower more likely. Let's see what happens. Is at the mercy of Wednesday as well. MicroStrategy going to work his way lower, and you got Ethereum just working his way lower again. So by the way, on Bitcoin, when I said that I liked it, because I thought this was going to be a divergence right in here. I thought that was a divergence. I was wrong. However, this is why I don't buy the dip. I had my alert there at 44541. If that got alerted, I knew it was going to break the 50, and I was probably going to go long. I never got alerted. I never buy the dip. But that's a way that you can manage that trade. So guys, at the end of all, I just say that you're going to have to wait, be patient, let the trade come to you. There'll be an exhaustion rally, and it's really all about Wednesday. Okay, if you want to watch this video, welcome to it. But what I see this week as far as the XPX, I gave you the ranges there. I'm expecting it, like I said this morning in class, it rallies. I'm going to wait for what to do right there and take advantage of that trade. If you want to follow, join the Morning Brew every morning at 8:30 and 9. And that's where we're going to be setting up for Wednesday. Guys, I wish this was a more jam-packed. If you want to know exactly about interest rates and all that, I talked at length last week about this, and obviously we did well. But right now, there's not really, we're just going to be chasing if it keeps dropping. We need them to set up properly, go a little higher, and then let's see. I think this market still wants to go a little lower. That's what I'm sensing. It's not going to go lower tomorrow, but probably this week, and we'll see, and then we'll see. Guys, that's all I have for this week. So if you want to join, by the way, we started a group this week on my Patreon page. We have the technicals analysis for momentum trading. You're more than welcome to join in. We have some spots there, and pretty much what's coming up soon, which I'm going to throw in there for my technical analysis trade, is how to take advantage, how to use options in a strategic environment where you can increase your probability in your entries. And that's going to be coming out soon. And if you want to go in there, client in, log in, join us for Sunday sessions at 2 o'clock where we analyze all our trades and learn about momentum trading and get to know where's the highest probability trades. You're more than welcome to that. Other than that, guys, have a good evening. This was a short one this week. And go out there tomorrow. Go get it. I'll see you guys tomorrow. All right, guys, go out there. Go get it. God bless.